Yeah. Check, 1, 2. Yeah. Check, can you hear me? Check, 1, 2. Okay. All right, we have our panel on the stage. Our moderator, Shubhanga Prasad, partner Beta Plus. Mr. Sagar Agarwal, the panelist, co-founder and managing partner at Beam's Fintech Fund. Mr. Sandeep Patil has joined us virtually, partner, head of Asia QED Investors. We also have with us Ms. Smita Agarwal, global investment advisor for Flourish Ventures, and Mr. Suraj Agarwalla, vice president growth, Sequoia Capital India. And over to you, Mr. Prasad, to get started.
Wonderful. Can you hear me?
What are you saying? Somebody else?
Amazing. All right. Thank you. All right. Let's give it a minute, perhaps.
No, you can continue.
You good? Awesome. First of all, thank you for giving us your time and the panelists. It's been amazing getting to know all of you over the last few hours, and I look forward to an engaging discussion over the next 40 minutes. During the next 40 minutes, what we try to kind of talk about is all around how the investment opportunities in the fintech ecosystem is, and how is the kind of global perspectives. It's a privilege to be having Smita here, who has extensive experience from Southeast Asia perspective. We have Sagar here from Singapore, and he's able to kind of give us a lot more from what growth stage investment looks like. We also have Sandeep joining in from the US or the UK, one of the two for sure, and he will be able to kind of give us a more Western kind of perspective, and how do they look at Indian fintechs. What we will be covering is largely around the opportunity landscape, the regulatory outlooks, as well as the funding environment over the next few minutes. So to start off, Smita, perhaps from your side, help us understand how you look at fintech as a whole, especially given that India is not the only space that you look at, and what are the kind of opportunities that you are seeing?
Good afternoon, everyone. Thank you, Shubhanga. Ironically, actually, the pandemic gave a huge boost and a shot in the arm to the entire fintech industry. In 2021 was a watershed year, and there was over $500 billion of global fintech deals that happened. I'm talking about it. This is a number that includes private financing, IPOs, and M&As. And that was absolutely phenomenal. Across all the sectors, fintech was grabbing the biggest share. So yes, that was actually, I think, the biggest silver lining of the pandemic that we saw. And the interesting thing is that of this $500 billion plus of deals that we are talking about, almost 50% or a little more than 50% actually happened outside of North America, which means a lot of the emerging markets and the developing countries are emerging as fintech hubs, which is really good news. Of the 50% that's happening outside of North America, Asia forms almost a third of it. And in the first half of 2022, India still grabbed almost 40% of the Asia share. So India is actually right on top there. It's number 3 as far as the fintech ecosystem is concerned, right after US and UK. So it's a really good time to be building and investing in fintech overall. I think there are a few trends that have happened over the last few years, and I'd like to just quickly touch upon that. So number one, the biggest trend that has happened because of the pandemic is the willingness and the the willingness to try new technologies and to try new solutions from a consumer end user standpoint, that is completely changed. You don't need to spend money to get a behavior change done. That is already taken care of. Whether it's a consumer, whether it's MSME, it's anybody, people are actually already on that digital journey and they're looking for solutions that can actually solve their problem. The second big change that has happened, I think, is the portability of technology and portability of ideas around the world. That timeline has crunched. Usually you would find that in markets like Asia, they would follow and lag behind the developed markets. 3 to 5 years later, you will find a similar solution coming up here. That's no longer the case. Almost at the same time that you find some new idea, new interesting model, you would find that very quickly getting picked up across geography. So that timeline has crunched. Of course, the solution needs to be contextualized to the local market, but clearly a lot more people are learning from each other, and it's kind of becoming a borderless world as far as new ideas and technology innovation is concerned. And the third big trend is there are pools of capital that are now emerging outside of North America. Of course, US continues to be the biggest and the deepest pool of capital, but you now actually have funds in Asia that are funded with Asian money investing in Asia. So the dependability on the US market is to some extent mitigated, which is again a good news because you do see macroeconomic trends that are different from region to region and country to country.
Sandeep, I think what will be interesting to understand is, if you kind of start dissecting fintech, I think calling it as fintech was very relevant in 2012, but given in 2022, it has grown so much. What are those subsectors that you're actually seeing within the Indian ecosystem and sitting out, especially from London? What actually kind of interests you here? What is the opportunity that you're seeing?
Yeah. First of all, thank you for having me. It's fantastic to see the Global FinTech Festival blossom into this giant and animated forum. So very, very exciting for the ecosystem. Look, I think you can't talk about India without talking about the global context also. So I'd underline some of the discussions that has already happened. Like I think India holds a very special spot from a macroeconomic perspective, from how the financial services industry has evolved there, from a very forward-looking regulatory stance, and frankly, from a talent perspective, both from a technology perspective, but also India is one of the few countries that boasts of fantastic financial services talent. Right? If you walk into any bank here in London, in the US, in the Middle East, most of the middle and kind of senior management would be a good chunk of them would be of Indian origin, right? And that's augmented by the fantastic management teams that we have in banks, NBFCs, financial institutions in India. So just adding to what Smita was saying, I think there's a fantastic inflow of entrepreneurs that we are seeing, who are not just second generation entrepreneurs, who are not just coming from a technology perspective, but people who actually know financial services in India and are taking a plunge into financial services, into fintech more specifically. So very exciting ecosystem. It holds a special place even on the global spectrum, if you will. Number three is just the beginning. I think there is a lot more to be had beyond what numbers say in terms of the innovation that this ecosystem will spawn, and how it can really attain a leadership position in the years and decades to come. To your question more specifically, I think there's innovation, good amount of innovation to be had across the breadth of financial services, right? We heard a lot of chat yesterday about kind of new innovations coming in into consumer lending and retail banking, and those will certainly be at the forefront of driving financial inclusion, but also adoption of digital across the kind of middle and top of the socio-demographic pyramid, right? But there's a lot of innovation to be had in B2B lending, a lot of innovation to be had in SME lending. We really haven't seen really breakthrough companies come out on MSME lending. There is the elusive goal of 60 million, 70 million MSME still lingers on. and we haven't seen anything at big scale there. I think again expanding the horizon beyond banking into wealth management and insurance. I think there are big innovations coming up there. The regulatory stance is becoming more forward-looking, especially on insurance, and that should spawn some very interesting opportunities in the years and decades to come. Lastly, I would say to round us off. India has had a very deep expertise in services meant for financial services companies, right? TCS, Infosys, etc. started what 3, 4, 5 decades ago and have become into global giants that they are now. And there is a lot of thinking, systemic thinking around how to build technology, bank-grade technology to serve financial services customers, but also to serve banks and fintechs to work better, right? And so we definitely see more innovation on that side, and that's certainly a classic kind of SaaS sort of business that we see building out in India, right? Again, not to take away from Web3, I think that's a very exciting technology. I'm sure there are separate discussions happening about that, and we can have a long chat about that as well.
Certainly, certainly. And Suraj, I mean, I think from your perspective, one of the challenges that India probably was talking about 3 years, 4 years ago was depth in VC market. And so, given that there is actually a lot more activity happening in Series B, C plus, where are the opportunities that that you are seeing, and how should people who have actually raised Series A now be considering their growth perspectives?
Uh, if we look from opportunity perspective, opportunity in any sector is a function of two things. One, what are the consumer preferences? And second, what is the level of technology? Let's take an example of, let's say, credit cards. If you had a credit card 10 years back, you would be happy with a credit card which just offered good quality rewards and, let's say, enabled you to pay online. But if today you want a credit card, you just don't want that. You want an online expense management, you want an online reconciliation of a payment, and probably a BNPL along with that whenever you're making an online payments or in an e-commerce site. So the opportunity from that perspective would lie in every sector, because every sector will have to change to meet the requirements of current generation and also go ahead with the technology. Something which was not possible, let's say 5 years back, was not even the expectation of the customer. Like if you went to shop on a kirana, you would have been used to paying a cash, but today most of the time you're walking without a wallet, hoping that you will be able to pay by an UPI. So we have seen a lot of innovations of that happening on the payment side. We will see the same level of digital penetration going to other sectors within financial services. I think we talk a lot about consumer-specific lending because personal loans is a lot in the talk. But even outside of that, whether it is SME lending that Sandeep talked about, or even insurance, we have seen a couple of new companies come on the general insurance side and a few now, right now, innovating on the health insurance side. But we have not seen any new company come up in life insurance in the last 1 decade. I'm sure people in the current generation expect a lot different from life insurance what my parents' generation expected from. So from that perspective, I would say every sector is open up for innovation. And even the sectors where we think a lot has been innovated, like payments, the expectation 5 years and 10 years down will be very different from what it is right now. Right now, we are very happy with the seamless UPI payment. Probably 5-7 years down the later, and which has already started, we might want credit also on UPI when we are making a payment. So from that perspective, I would feel that every sector is open for innovation, and especially in fintech, the innovation will keep on happening even in the same sector over the years. And I don't think there's a saturation for that at any level.
Suraj, Sagar, your views, sir, on this topic. What are the opportunities that you are seeing, given that you actually have a group which looks at early stage, mid stage, late stage? How do you see this?
No, I think just to add a little bit first on the trend side, right? I think two important trends that we are really watching close. Can you hear me? Yeah.
Yes, sir.
Yeah.
So two important trends that we are really watching that's happening in the market like India, right? The depth has gone much, much better now. I think if you look at 16 to 2022, 6-year journey in India, I think more than 3,000, 3,500 companies have been created in the fintech space. However, at least 30 to 40 of them have become unicorns. That's given an opportunity for a lot of founders to build second level companies, right? So we see a lot of Series A, Series B companies out there in India. So I would say roughly 200, 250 odd companies are in that bucket. So the depth of the market has gone stronger from a growth stage perspective. Largely, India was an early stage ecosystem for the last 6 years, which is fundamentally changing now, giving a lot of opportunities for not just Indian funds, but global funds also to start investing in India. So the depth of market is changing, the quality of founders have improved, the quality of businesses have improved. That's one thing we are watching. I think second that's happened in India, which I think everybody should appreciate, is also that the kind of M&As we have seen in India, especially in the fintech space, right? Second largest M&A in tech space all over across all the sectors in India, right, is in the fintech space. I think the largest acquisition in India was Flipkart in 2016-17. After that, Naspers acquiring BillDesk was the largest acquisition, $5 billion. It's not common to happen like this, right? So that's one thing, the markets are evolving. We are having a very mature market in India now. And the opportunity for founders and a clear exit proposition, both from the investor perspective as well as in founder perspective, is there. So the investment market is improving significantly. We can clearly create a company from 100 to $1 billion or $2 billion and look at a healthy exit for ourselves, not necessarily depend upon just looking for an IPO as a market. And in terms of opportunities, I think we're very bullish on embedded finance. I think there's a bit of changes in regulations around embedded finance, but I still think there's a lot of opportunities in agri, health, education, consumer, logistics, B2B commerce, right? All of these segments, there's a lot of disruption needed, a lot of improvisation needed. We're still going the archaic ways of doing payment, lending, insurance, these categories. I think that sector we are very bullish about as Beams, as a group, and we are looking at a lot of companies in that space. I think beyond what trends Smita, Suraj, and Sandeep has covered, I think these are some of the sectors that even we are evaluating.
And coming to what is next set of innovations that is going to happen. And Smita, you're very close to early stage investments, and you're also looking at opportunities not just in India. So how would you kind of categorize what are the white spaces that new entrepreneurs who understand technology, who understand finance should be looking at, and how do you kind of look at those white spaces?
So I'll answer that in two parts. So first of all, yes, if I look at Asia more broadly, so there are many emerging markets that are actually very, very interesting. India, of course, continues to be very exciting, but then there are markets like Bangladesh, Indonesia, Vietnam, that have a lot of things that are kind of common being an emerging market or developing market. What that means is there's a huge amount of informality that exists. MSMEs contribute a very, very large section of these markets. And the need for MSME digitization and the opportunity to actually make a difference there and to contribute to the increase of their income and growth is actually very, very significant. I think the big step change that happened was because of the pandemic, the willingness to digitize and use digital tools has changed dramatically, and therefore that actually offers an opportunity to innovate specifically for MSMEs. And that's a trend that we are seeing across all of these markets. India alone has about 12 million plus Kirana stores, and they are not going anywhere. The whole narrative around modern trade and e-commerce are going to gobble up the Kirana is not true. They are very much here to stay, and what is really needed is to kind of bring in a lot more efficiency for them through the use of digital tools, be it on the sourcing side, be it on managing their store, or be it on the working capital side, which is actually the biggest need that they have. The second, we talked about payments, Suraj touched upon it. So I think a lot of work has happened on the B2C payments, but there's still a long way to go on the B2B payments. And that's a much bigger revenue pool, that's a much bigger pie. And the approach and the innovation that you need on the B2B payments is slightly different from the B2C. The B2B payments, they need much more embedding along with reconciliation, order management, and all of that. And there's a huge opportunity to make the B2B payments much more seamless and digitized. And embedded finance, I mean, that continues to be a really big opportunity. I think India is at an advantage because some of the foundational blocks are already in place to make embedded finance happen. So we've got the digital identity, you've got the payments layer sorted out, you've got the account aggregator layer sorted out, which allows you consent-based data exchange. And so what is needed is to kind of build the application layer on top of that that targets some of the underserved customer segments. So, for example, in many markets, we are seeing, a combination. For example, if you're targeting the blue-collar workers or the gig workers, you see a combination of a jobs marketplace plus payroll processing plus financial services, which offer remittances and earn wage access all together embedded as a single platform, targeted at a very, specific customer segment. BNPL for merchants, I think that's a big opportunity when they're sourcing. How can you make that entire process flow? So it's kind of a working capital solution, which is giving them in the moment ability to pay later for some of the supplies that they are ordering. So I think the entire embedded finance story is just about getting started. There's a huge opportunity for doing it. In many other markets outside of India, the big opportunity is actually the B2B financial infrastructure. In India, we have NPCI and the other agencies taking care of that. But in many other markets, it's the private sector and private funding that's actually even funding the financial infrastructure of API exchange or interoperability of payments and all.
And from Suraj, your perspective, one of the things that is less talked about is the corporate, banking side of things. When you talk about trade finance, for example, even today, an importer or an exporter needs to kind of cut, their receipts in 4 copies, one for the port, one for the banker here, one for the banker there, and then the exporter. What are the kind of opportunities that you're seeing, especially in the realm of corporate banking? And do you think 2020s is the decade where fintech is going to break the barriers of corporate banking?
Yes, I think it's the same way because finally, what we do in our B2C experience, right? Over a period of time, we want the same experience in B2B because if you're used to paying digitally when you're going out shopping, you would want to pay it even when you are on an enterprise, probably a mid-sized enterprise or let's say large enterprise, because you're the same person at the end of the day, right? So you want the same experience on the B2B side. I think, but with B2B, it becomes a bit more complicated because there is a lot more regulations involved. So you have to have a platform which is able to meet the requirements of your in-house ERP accounting, because that's a very important component of any business. Second, being able to make those payments digitally so that you're able to track those payments and reconcile with your accounts. And third is being able to manage the regulatory payments right along with it. Since you take the example of an import-export side, right? If you're making an export today, you need to have that entry in your ERP. Second, you need to ensure that you're complying with all the import-export regulations. So whether it's custom duty, excise duty, all that regulations you need to comply with. And third, you need to ensure that you are complying with Forex regulations so that you receive money in Forex, which is converted to your INR account when you receive the payment. So what we need today is a platform which is solving across all of these 3 things. And we have seen few companies come up in this space, whether it is related to financing of it or whether it is related to accounting of it. Like there's one company that we can take example from our portfolio, like let's say Drip Capital. It's solving for those people who are exporting from India to globally. How do we ensure that you collect payments for them and is also able to supply financing to it? So I think whatever we are seeing on the B2C side as an innovation, some of these will start to flow to B2B, but it's just that with B2B it becomes a lot more complicated because it's not only a user experience that you need to solve for, you need to solve for accounting of it, you need to solve for regulation of it and things that come along with it.
That kind of paves good, way into our next broad topic around regulations, right? How do you guys view regulations in India? And I'm keeping it extremely open. And Sandeep, maybe if you want to kind of start coming in, the question really is it favorable from global perspective? Are there things that can be improved? Are there things that you as an investor would like to see in the Indian ecosystem? Provocative, but I want to kind of try and get an honest feedback from the panelists here. Sandeep, if you want to go with your views on how you look at
Sure.
Indian regulator.
Happy to take that up one. See, look, I think QED has a bit of distinction in the VC community in the sense that we are a bunch of operators who have become investors. Right? I myself have worked in various aspects of financial services and consumer technology for more than 2 decades before we became investors, going all the way back to Nigel, right, who founded Capital One, which is now among the top 10 retail banks in the US. So as operators who are masquerading as investors, we have a nuanced perspective on regulations. We honestly think that India is blessed to have a very forward-looking regulator as we have. We all talk about UPI and how amazing, all the amazing thing that's doing today. But those of us who have been in the ecosystem for a while will recognize that the first kind of discussions on UPI and the initial coding on UPI started almost a decade ago. Right, it was introduced, I think, in 2016 was when UPI went live. So this is not something that happened at a flick of a switch, right? The Jan Dhanman, the Jam Trinity, what we are seeing now in terms of account aggregator, Oken, all of these things take a lot of time to build, especially in a intricate economy such as India, right, where there are a number of banks and financial institutions operating, the consumer and the user group are so diverse and so on and so forth. And then Indian regulator has certainly the distinction of not having any big blow-ups in the economy in past several decades. That is quite unique, right? If you look at from a global perspective, it's very unique for a regulator to achieve that distinction. So they have certainly earned their stripes, they have earned their respect, and they have done it rather well, right? So kudos to them for that. I think talking specifically about what has been happening over the last few months and sort of the clarifications that have come out on various circulars. See, I think longer term, right? Think about the story not for the year, but for next 3 years, next 5 years. I think clarity is extremely helpful because it helps you drive your business strategy forward. It helps you drive your product strategy forward, and ultimately, it helps you think about your customers in a different way, right? So having more clarity is actually much more helpful. I think second aspect of it is there is a cost of regulation, but there's also benefit of regulation. If you are regulatory compliant, that actually signals to your users and customers that there is a certain blessing that you have, a certain threshold that you have crossed in terms of your processes, technologies, how you operate, in kind of backing that you have from the wider ecosystem. That actually would eventually drive far better customer adoption than, frankly, what we have seen so far. And I'm talking about things beyond payments here. So having more clarity on regulation also helps from a user trust perspective, definitely. And I think the third part of it is if you think very strategically about the kind of founders that are starting up now, but also the founders who will think of building fintech companies 2 years, 3 years, 4 years down the road, right? Having clarity on what is allowed, what is not allowed, how to operate in the ecosystem will definitely help them think of new innovations that, frankly, you, me, and the rest of the panel haven't even thought of today, right? So we are a big supporter of bringing more clarity in on the regulatory front, and we certainly see India as having being blessed with a forward-looking regulator.
Totally. And Sagar, sorry, I keep getting your name wrong. Apologies,
fine,
man.
yeah.
I think one of the views that I would like to kind of bring you in on are there any sub-segments within the fintech? And I think we all speak about the kind of great work that we've seen, especially in the payment side and now in the recent past on the lending side. So are there any subspaces within the fintech ecosystem that you as an investor would like to see better clarity on? And how do you kind of end up having those conversations both with a regulator as well as with startups alike?
So I think one specific segment within the fintech space that we are closely associated with now, right, is a digital banking space, right? We invested in Neo recently. Company's done phenomenally well, but Every time I keep hearing that, RBI still has no thought process around, or they're thinking about it, or there's a thought process, or there's a guideline, there's a framework that's happening. And there's a think tank of the government called Niti Aayog, right, which is coming up with policy framework at the same time. So there is a bit of a conversation going on. But I think if there is a thought process for the government or the central bank to actually think about a digital banking license, they should be a little bit more proactive in their approach, is what we feel. If there's a little bit more clarity, our founders can actually think about building a bank than thinking about building a neo-banking platform, right? That's where I feel that there's a clarity required. I think second important segment, which is I think India has always been alluding, is the crypto and the Web3 world, right? The whole NFT space. I think founders are confused, except the taxation bit of it, right, which we have solved for it. But beyond that, the whole ecosystem, the regulation, the way it will function, who can operate, who can play, who cannot play, still a lot of lack of clarity. And it's not just in India, it's globally. But I feel that we've been progressive in multiple segments. Why not be progressive over here as well? So those are two segments that we are challenged in a way. We've been having proactive conversation with multiple associations, right? So Fintech Convergence Council is one of them. Obviously, Beams one as a fund has a strategy of bringing banks and financial institutions as investors in the fund, right? So for example, we have Yes Bank as investor in the fund. So we also have channel communication through banking partners saying that why don't you also represent to the central bank or the ministry when you're talking to them about these are the concerns that fund managers like us or the industry like us has it all the time. So that's one way of passing on our communication with them and trying to explain the thought process behind it. I think in regulation, one more thing that Sandeep alluded to was that if there is a change in regulation that's happening, then there should be a framework issued before it and a little bit more guidelines and thought process around it, right? Something like what happened with the BNPL category or the prepaid card category, right? It was a little bit more unplanned, I would say, which could affect a lot of investor money at the same time. So I think a little bit more planning would help. I'm sure there's a thought process behind why the government or why the central bank wanted to come in much more quicker. But I think a little bit more framework and policy around that, like a little bit more proactiveness would help for us to decide better on how we want to think about it. And even the founders at how they want to think about their own company, own products and own services.
So quickly, I think we have about 8 minutes. The question that all of us want to know is the funding winter over or are we still in it? Smita, do you want to start, especially from an early stage standpoint?
So before I talk about the funding vendor, just one point that I want to add on the regulatory piece. So we are an investor that focuses on fintech only. So we believe that if you're doing anything with financial services, regulation is a reality, it's a requirement, it's a necessity. So, our advice to all our founders is always that embrace regulation rather than shirk away from regulation. Plan proactively around regulation rather than try to work, without it. Because there are guardrails that come in with regulation. It helps. I think having regulation is better than having regulatory ambiguity. And it takes time. Regulators are not as swift and fast as the innovators and founders are, so things do kind of overlap differently, but in the long run it's actually always good to work alongside the regulators and try to kind of also educate them. I think as the investor community as well as the founder community, we have a responsibility to also educate the regulators on some of the new models and new changes and new technologies that are possible. With that, coming back to where we are on the funding side, so clearly we've all seen the meltdown in different forms, from the stock market collapse to the macroeconomic situation. There is definitely a correction that the world is experiencing, but I think the answer to is funding available or not is a little bit more nuanced, depending upon two things, depending upon geography and most importantly depending upon the stage of the company. I still see a lot of interest and a lot of momentum in the early stage, and that I think is going to continue. Um, there is a different approach, from a different stage of the company, we are seeing different responses and reactions. And I think this is all kind of a transitionary phase that we are in. But one thing is clear, that as founders, we should understand that investors have a different ask depending upon what stage you are. So if you are pitching for a seed round, then what the investors are looking from you is very different when you are pitching for a Series B round or a later round. So as a seed, there's not much that you have to show by way of past and by way of traction. There, it's really about your ability to convince the investor about the potential of the idea that you're building and how big it is and how relevant it is now and why you're the best placed person to make it happen. Whereas when you're pitching, for a growth stage funding, it's a different ask, and there is a lot more focus around monetization path to profitability. There is clearly moderation that we are seeing in terms of valuations and pricing. I think all of this is kind of just giving us an opportunity to reset expectations, reset priorities, but it's definitely not the end of the road. I think it's a great time to continue to build and to continue to find like-minded investors. I think the clarity that is needed as to what you're building and how you're communicating what you're building is most important.
Just on a lighter note, we've got a couple of $1 billion over here between Suraj and Sandeep, so there's no funding winter, guys, right? So now just coming to our thought process around it, just to add a little bit more flavor to what Smita said, I think we have to divide funding into 3 stages, right? The early, the mid-growth, or the mid-market, we call it, and the late stage, right? I think it's a question of how fast have you moved from buckets. Have you fundamentally built a company across the buckets and then gone from one journey to the other journey? Then you will continue to get capital. See, in India and globally, good companies will always get good capital from good investors. That goes without saying, right? The challenge is that if you've jumped buckets much faster because there was irrational exuberance in the market, you have not proved your fundamentals. Whether you're in early bucket, whether you're in mid bucket or late bucket, you will struggle to raise capital, which is exactly what's happening, right? So we are seeing the late stage companies going through a slightly down cycle in terms of valuations, but they're getting capital, right? If they are willing to relook at their prices. Same in the mid stage, right? The premiumization has gone down. Earlier in India, Series A to Series C was like 3x and 4x jump in valuation, and Series B to Series C was like 3x jump again, right? Which has gone down to 1.5x, which is what was needed in the market. You have grown 100%, let's not jump the valuation 300%. So that is changing, which is why the capital is available. Capital is available at the right price for the right company, right founders. You build it correctly, ask the right price, you will get it. I personally feel. And same is the stage with the early stage companies also in the India.
Sandeep, your views first.
Sure. So this is an exciting one. I think this is the money question, if you will, across everyone. Look, I think it's helpful to have a bit of context on where all of this is coming from, right? Most of us in the room have lived through a decade of low interest rates, right? And that got the world used to having plenty of capital, plenty of liquidity being sloshed around, right? And if you think of it from that perspective, and then capital getting allocated to emerging markets, to alternate asset classes, down to venture capital, growth equity, private equity, that becomes a percentage of an allocation. So we have been flushed with cash for a long time. Last year certainly was the crescendo of it, when we saw record amounts of venture capital, not just in India, globally, everywhere across, right? Then what you see in last 7 to 8 months is basically interest rates correcting, because Fed was very worried about inflation, and there are a bunch of reasons for inflation. We can get into that, right? But what has essentially happened, because interest rates went up, is cost of capital has gone up. So all the correction that you're seeing in US equity markets principally is because of cost of capital going up. If you double click and actually look at company performance in tech and in fintech, the company operating performance has not changed that much. They're actually delivering on expectations. But it's just how you value those cash flows in today's money, right? Going back to Finance 101, that's literally what has happened. And that's the massive amount of correction that you're seeing in the market. Now, when do you expect cost of capital to correct? It will correct when when economy and analysts, more importantly, have a stable outlook on inflation and global interest rates. I think inflation is probably going to stabilize by summer 2024, not next summer, but the following summer. But markets typically have 1 year forward view, right? So we expect summer next year is probably when there'll be a lot more stability in equity markets, and that's when investor outlook would stabilize. That said, there are two big exceptions. One, India is an exception. I said that at the beginning of the discussion as well. I think it's a macroeconomic hotspot, economy that has done really well, that is expected to do well despite the larger macroeconomic circle. And then the second part of it is quite frankly game theory. As there are as many nervous founders around this panel, there are a lot of nervous investors with a lot of dry powder also sitting around this table. So I'm sure there is happy marriages to be had in that ecosystem. I hope rationality prevails, that we make good decisions, because we want to set up the ecosystem not just for another funding crescendo, but we want to set this up for a long-term success, right? So with that hope and aspiration, I hope we make the right rational decisions.
Suraj, you have the last word.
No, I'll keep it very short. I think if you look at from a founder's perspective, what matters in the long term? One, we need to build a very high quality product experience. Second, we need to ensure that customer experience is very good. And third, we need to ensure that the economic engine is running. So if we forgot the larger macro of things for companies which are very early in the journey or Series A, Series B stage, I don't think they need to worry that much about how the macro is going on. I think for them, these three things matter. And if you are building a high quality company, there's a lot of capital available. As Sandeep just pointed out, India funds have raised record amount of capital last year. So there is adequate capital, especially from India perspective, available from investment perspective. What you need is high quality companies. And the only thing that might have corrected between 2021 and 2022 is one, the pace of investments, and second is the valuation. But from a capital availability perspective and high quality company being available perspective, I think both are still there in the fintech market.
I think just one last point that we should not forget that last 2 years have been record exits globally, right? So LPs are flushed with money also. It's the interest rate cycle which has made them a little bit more cautious about the future. But they have got record exits last year, right? And when there's a record exit year, people are generally sitting on capital which gets deployed the year after that, right? So 2022, a lot of fund managers would end up raising capital, and you will see capital coming in next year a lot more, I personally
So
feel.
essentially, if you're a Series B, C company, it's better to start brushing up DCF analysis. Yeah. So that's with that note, I think I'm going to.
Shubhanga, in one,
Sorry,
yeah,
go
the
ahead.
one last of the last words. I think it's worth, from this panel, I think it's worth echoing the positive sentiment that for the right companies and for the right founders, there's plenty of capital sitting around, right? I echo the sentiment of all the panelists here that founders should not worry about funding winter or not. All of that stuff is important. But I think what's far more relevant is how you're building your firm, how you're building your company, and how you're thinking about ongoing growth and profitability, right? So if you're building the right set of companies, I think there's plenty of capital around. Just reach out to folks. There are good discussions to be had.
Perfect. I couldn't have summarized it better. Thank you so much, everyone. It's been an absolute pleasure to be alongside with you. I look forward to kind of engaging more beyond the stage as well. Thank you.
Thank you, Shubhanga.
Do we have our photographer here? Thank you for the panel. Thank you so much.